Hello everyone, it is Sunday, December 26th, and this is episode 43 of Odds Are, your S&P 500 weekly market forecast. Alright, last week was a short week, but a fun one. If you remember what we talked about last week, we said that there was a very, very high probability, in fact a 99.98% chance that we were going to have a breach of one of the breach points. And that was because in the week preceding, we did not have a breach. So, what happened? Well, let's take a look here. All right, so not only did we get a breach of the breach points, we got a double breach. So to start off the week, market dropped like a rock. We went well past that 45.56 lower breach point. But check this out. Look to see where the low was at. We went right down to the lower end of the Bollinger Band and then stopped. And then came right back up. And then went back up towards the midline, that magnet effect bringing us back to the midline, and then breached the midline and went all the way up to breach the upper breach point, which is up at 47.18. So we did close actually outside of the expected settlement range, which is not that surprising considering what a roller coaster ride that week was. But then we did stay within the Bollinger Band range. You can see still staying in that blue shaded area. And like I said, we closed with two breaches under our belt and outside of the settlement limit. So plenty of excitement for all to be had. Let's take a look at what that did to the moving averages. All right, so nothing has changed. And that's because all in all, we ended up closing 6 points higher than where we were last week. So really not much of a net change week over week, but plenty of price action in between. So the short-term moving average still at neutral, medium-term still at bullish, and long-term is still at bullish. All right, let's take a look at what we are projecting for next week. So we are looking at breach points now, a lower breach point at 45.81 and an upper breach point at 47.92. Now, take a look at where the expected settlement range is, because again, we've seen this before, where we have actually two things going on. We have one, the breach points are very, very close to the actual settlement range, and the lower breach point is actually outside of the settlement range. So we're looking at an expected settlement range between 45.87 and 4800. That 4800 also, two things there. One, it could have its own magnet effect pulling up towards that round number psychologically that, tends to happen, but also it can also serve as a point of resistance. So we'll see if we even get close to that 4800 for either of those two dynamics to really take hold. But what we're looking at here is a situation where the upper breach point, and if we breach that, then yeah, we're getting close. We're getting pulled right up to that 4800 and we may stall there. So that actually could play out pretty nicely. We could breach that 4792, get right up to 4800, maybe go above it, and then have the 4800, act as resistance and kick us back down to close within the expected settlement range. The other option here is that we go down towards the 4581, breach that, and then pull back up. And then obviously the third option, which we experienced here a couple weeks ago, which is when the breach points are that far out and that close to the expected settlement range, we very well could not have a breach at all. Which, in this situation, that's kind of what my gut is telling me, is that we're not going to have a breach of the breach point. I don't think we're going to get down to 45.81. I don't think we're going to get to 47.92. So another short holiday weekend trading ahead with the New Year's holiday and things like that. So I think we're going to have no breach of the breach point. We're going to close within the expected settlement range, and we are not going to even get close to that 44.20 parabolic SAR. All right, let's put that all into the relative view. All right, so you can see what I'm talking about here, where we're at right now. We're pretty high up there. Look at that 47.92 and 4800, well outside of the Bollinger Band range. I don't think we're going to hit that 47.92. If anything, I think we're going to get pulled back towards that red midline. We've been kind of dancing. We've gone down, up, above, stalled, back down, back up above. I think we're going to end up getting closer to that red midline. I don't see a lot of volume going into this week, and I think that the holiday trading is going to just kind of fall flat a bit as we go into the new year. So unless something crazy happens, we are, I'm looking at it and saying we won't have a breach. Now, if I had to take my pick, then I'm going to go with the 45.81 just because that's within the expected settlement range and it's in the direction that I think we're going to go, which is down towards that midline. All right, if you didn't see that one coming. So last week we said it, we called it. It was going to be a high probability of a breach, and it did not waste any time. Literally the very next day. So the market that just went straight down and breached that breach point like we called it. And then just as an added extra bonus, it went back up and hit the other breach point for just for good measure, right? So as we're going into this week, hopefully you guys can't say you don't see it coming if we have a pretty stagnant trading session or a trading week and we don't breach either of the breach points following a very exciting week where we breached both. All right, and now we'll wrap up with the quote of the week. So this one's by Mr. Peter Borish. He's the chairman and CEO of Computer Trading Corporation. And Peter says, "We want to perceive ourselves as winners, but successful traders are always focusing on their losses." Now, that might seem overly pessimistic, but there's a reason for this, right? There's a lot to be learned from your mistakes. And I'm sure most of you have already heard some variation of this. This is not a shocking revelation to you, but for traders, when they attempt to implement a system, whether it be a mechanical system, a discretionary, a trading strategy, whatever it is, if it doesn't work, they need to evaluate, they need to dig deep into that and find out why it didn't work, because there is no shortage of strategies and approaches out there. So you could spend the rest of your life doing nothing but losing money trying to find what is the thing that's going to work for you. But the essence of this quote is that the successful traders are focusing on their losses in an attempt to shortcut that process and see what went wrong, because maybe you're not that far off with the strategy. Maybe you just needed to tweak a parameter. Maybe it was changing it to a different time frame. Maybe it was just the wrong asset class. Maybe you just weren't ready. But whatever it is, instead of just bouncing on to the next one, take the time to stop and analyze and focus on your losses. There's probably some really good stuff to be discovered there. All right, guys. Well, I will let you guys go. Enjoy your weird short holiday or intra-holiday week here. And I will see you guys here in the new year. Take care.